Buy to let used to be a no-brainer. Low interest rates, rising house prices, but what about now? Tenants are squeezed, landlords are taxed far too much. So is buy to let dead? Now, I've been a landlord since 2002, and I'm going to use all of that experience to tell you why half the UK despises landlords, whether renting is still broken, and the painful truth behind house prices. And I'll be finishing the video with my property plans going forward. Chapter 1, Why Everyone Hates Landlords. Let's get straight to the point. The average renter isn't exactly thrilled about handing over 50% of their income to someone who owns 5 or 6 houses. And it's not just anecdotal. Surveys show over 50% of Brits have a negative opinion of landlords. Yet 80% of tenants say they're happy with their actual landlord. If you're a tenant, let me know what you think about your landlord. This disconnect is huge. It's not about your landlord, it's about the idea of landlords. So why the hate? Greedy tactics, rent hikes of 20 to 30% with no improvement in property conditions. TikTok and Instagram landlords flaunting property portfolios for fun, while young people can't even save a deposit. The horror stories, damp homes, ignored repairs, sudden evictions, and a deeper resentment. I'm paying your mortgage, you're building wealth while I barely get by. But there's a nuance as well. Most landlords aren't predatory. They're people with one extra property, often accidental landlords. Many rent below market rates, especially to long-term tenants. The real issue is this: the housing system puts tenants and landlords against each other, when both are often victims of a broken system. Just to be transparent, I'm a landlord with 6 properties. I've struggled with rising interest rates over the last few years, but I still haven't put rent up. If a new tenant moves in, the rent goes up to whatever the going rate is at the time, but it doesn't go up. I actually have a tenant whose rent hasn't gone up since 2007. Chapter 2, Is buy to let dead? Let's get into the economics. Is buy to let still worth it? The squeeze on landlords, stamp duty surcharges of 3% on additional properties, mortgage interest rate relief scrapped. You now get taxed on income, not profit, minimum 25% deposits, increasing energy efficiency requirements, tenant protections tightening under the renters reform bill. Not only is it harder to make a good return, it's also riskier. That's why over 150,000 landlords have exited the market since 2017, and more are on the way out. But here's the twist. When landlords sell, the rental supply tightens. Fewer rental homes, higher demand. And what does that do to rent? Exactly, it goes up. So is it dead? No, but it has matured. It's not passive income, it's not quick wealth. Today's property investing is about long-term gains, strong cash buffers, and being a good landlord. Let me know what you think. Do you think buy to let is dead, or is it a big part of your overall portfolio? Chapter 3, Why House Prices Are So High. Here's the myth. Landlords are the reason house prices are unaffordable. But let's look at the data. The real reason house prices exploded: cheap credit, ultra low interest rate, made borrowing cheap for years. Mortgage market changes, longer terms, joint income calculations, and help to buy schemes increased affordability on paper. Population growth outpacing housing supply, investor psychology, FOMO speculation, and the property always goes up mindset. Zoopla data shows a 74% rise over the last 20 years. The average price has increased from 154,000 to 268,000. Buy to let activity only explains 10% of it. The real driver, borrowing, and the ability to pay more equals higher prices. Building millions of homes won't crash prices overnight unless we also make it harder to borrow. But who wants that politically? No one. That's why the system stays broken. Chapter 4, Institutional Landlords. Good or bad? Now here's a new twist in the housing game. Corporations like Lloyds, Legal & General, and BlackRock, they're buying up loads of housing estates. My mate's dad, Hilton, also known as the Great One, got us all into property in our late teens and early 20s. And a few years later, he also warned us about how the property game was potentially finished because the big boys were buying all the property. Scary, maybe, but possibly you could say efficient. The pros: build to rent, increases housing supply, professional management, longer leases, faster repairs, often includes bills, Wi-Fi, gyms, communal spaces. The cons: tenants become numbers on a spreadsheet. Rents may rise more predictably and quickly. Less room for negotiation or flexibility. But here's the thing: institutions don't just buy, they build. That's more than a lot of private landlords. And if they raise standards, everyone has to follow. I'm a bit on the fence with this one, to be honest. What do you think? Let me know below. Chapter 5, the rent control trap. Why rent controls sound great but often fail. Artificial caps reduce landlord incentives. Supply shrinks, especially in cheaper segments. Bidding wars emerge in underpriced markets. A black market can develop. Tenants sublet illegally at higher prices. Countries like Sweden and Germany do have rent controls, but also massive waiting lists and housing shortages. What might actually work? Let the government build and rent homes. Influence the market, not by controlling it, but by competing in it. Chapter 6, is property in general still a good investment? Property is no longer a passive get-rich plan, but it's still a viable strategy. For the right investor, what works in 2025? Investing for income, not speculation. Holding long-term to benefit from inflation and capital growth. Keeping rent stable for good tenants equals low voids. Fewer headaches. Choosing areas with solid rental demand, not just price growth. And don't forget, even when property prices go a little bit sideways, inflation erodes your mortgage debt. That's the silent tailwind behind the strategy. So if you invest wisely, treat tenants well as you should, and don't overstretch, it can still work, but it's not parameters anymore. This is how I'm going to approach property investing going forward. Now, I've changed my thinking over recent years because of what I've been talking about in this video. 2019 going into 2020, I was doing a lot of property networking, property training, and I really wanted to make property my full-time job or business. I wanted 20 properties plus, and I was thinking that would be my financial freedom. It didn't go to plan for various reasons, and now I just want 5 properties fully paid off by the time I'm like 55. That will mean around £4,000 per month in rental income based on today's figures. That alone would be a nice little retirement pot. But I do have other assets to add to my overall pot, like my SIP, for example. So in my humble opinion, property is still a good investment, but it's far from perfect. It's far from easy. Summary: is property investing dead? No, but the game has changed. The days of easy money are gone. What's left is a business, and like any business, it rewards those who play smart. I would say it's not for everyone, to be honest. I know people with 30 properties plus who love it. I know landlords with 1 to 2 properties, buy-to-lets, who hate it and are looking to sell. We're all different as investors. The main message I want to get across in every one of the videos on this little channel is the importance of investing. And on that note, I'll leave you with a personal story to drive the point home. Over my 24 years of investing, I've met hundreds of people full of regrets, contractors in the late 50s, early 60s, who earned a fortune working overseas. I remember working in Oman back in 2020. A colleague who was 60 years old told me I could have easily saved £1,000 per month between 40 and 60, but never did. If he'd invested that £1,000 every month in the S&P 500, averaging just 10% annually, which is in line with historical averages, he would have had over $750,000 today. That's financial freedom for most people. If you're in the camp where you think property is finished, you might prefer index investing. By far my favourite way to invest. Less stress. See below for a video that gives you 5 index funds to consider.